Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders. Great to be back here with Blane Markham. And Blane, has been about a week or so, weeks I think, since we chatted. It's been quite a while, and great to have you back. Interested to follow up on some of that stuff, and a lot going on today. Obviously, the big headline is the Nvidia earnings. Watching that really close. Markets are kind of treading water more or less right now, waiting for that to come out. So interested in your take and kind of where you see the best place to place a trade.
Yeah, absolutely, John. Well, first off, thanks for having me back. And like you said, it's been a couple weeks since we were able to sit down and get together and kind of chat about what's going on in markets. And certainly, there's been a lot of action in markets since we last had one of these chats. So I'm glad to be back here talking about it. And yeah, you nailed it. Just right from the start. Of course, the big story today. It's finally here. It's Nvidia Day. People have been looking forward to this for a while. I think there's a lot of anxiety and a lot of anticipation leading into that report. Today after hours. Of course, we've seen, kind of this rolling rotation kind of correction going through different pockets of the market. And, I think I mentioned last time we were here several weeks ago that, a number of sectors had already kind of gotten knocked off the horse and we're already down, 10+%. You've seen what's happened at Bitcoin. I mean, cryptocurrency is getting slammed. It's, just a clear risk off move. And, the indexes were still holding up for a while because, of course, that hadn't, kind of had not spread over into tech and comm services quite as much. But of course, since the last time we were here, we've seen that. We've seen technology really start to kind of join in on that corrective type trading. And so Nvidia, not excluded from that. We've seen a nice pullback in Nvidia. Of course, the tech selling has led to some, wobbling in the markets. I'll go ahead and pull up my charts here just to kind of, just show you what I'm looking at. Of course, this is a chart of the VIX right here, John, just showing you some of that elevated volatility in markets. Of course, we've gotten a little VIX spike here. Nothing, it's not a massive spike in the VIX by any means. Nothing like what we saw back in late March and April, where the VIX went up and, opened
Right.
above 60 one day. It was that was a just nosebleed reading. It's rare to ever see a reading that high. But, we've been above 20 for several days now. So that's, elevated VIX. I think we're starting to see some signs here, John, on the charts that at least, we might not be over with this correction that we're currently in. But at least due for a bit of an oversold bounce. I say that because looking at the VIX chart here, of course, you can see we've started to trade back up above the upper channel here on the VIX, and also just looking at this 5-day RSI, you're starting to get some pretty overbought, overheated readings just on this current VIX pop.
Mhm.
We could still have another day or two higher, but I think we're getting near the point where we could be due for an oversold bounce, and I think that's being also shown on the charts here too. Looking for the S&P 500. Of course, down, a little less than 5% now off of the intraday highs. Actually, at the lows of the session yesterday, John, at that exact low was exactly 5% down from the intraday high from this trading day right here. If you go back to late October, so it was exactly a 5% pullback. So I think there's some psychology in that for markets who are like, okay, we checked the box, we sold off 5%. Now what? I think there's oddly enough a little bit of that going on. One thing here too, John, is that one support level that has held for several weeks. We had 2 Fridays in a row where intraday we went and traded down below our red line here, the 50-day moving average. We traded down to that, rallied throughout the day, and closed above it. So we had fairly, two successful tests in a row, 2 Fridays, 2 consecutive Fridays. But then, of course, in the last 3 trading days, Monday through today, we've traded below and broken through that 50-day moving average. So that's pretty
Right.
significant. So that's why, unsure that we're done with this current correction. But again, looking at the chart here, the 5-day RSI for the S&P 500, getting pretty oversold readings here. It was down, right about 20 yesterday. It's still hovering around 23. That's pretty oversold. So that's telling me that we're probably due for a bounce, particularly if you look back, the last several times this year that we've gotten these really oversold RSI readings. I mean, you can see right here, the first trading day in August, you see just a big oversold reading, massive rally up right after. You see it happen right here. the first trading week in October, had that big sell off right there, a big bounce back rally right after. So I think we could be setting up for something similar here. Obviously, a lot's going to ride on the Nvidia report later on
Right, right.
today, to kind of tie it all back into what we opened up talking about. Um,
Hmm.
that obviously is the backbone of the AI trade, which has been the massive narrative. If you think about this bull market as a table, if there's three or four legs holding that table or stool up, the AI narrative has obviously been one of those, and Nvidia is the most important stock to that. So I'm not, frankly, very concerned about what the numbers are they're going to report. I'm fully confident they're probably going to report great numbers and probably raise guidance. But what's a little more unsure is that a lot of the mega caps this reporting season. We just went through a whole earnings reporting season. Overall, the numbers are really strong. The problem was not with the numbers that were reported. It was the stock reactions afterward. Whether it was something in the guidance they didn't like about spending or whatever it may be. The numbers were actually really strong. It was the market and the stock prices reaction afterwards. So it's really hard to gauge. It's impossible always to gauge exactly what a stock price is going to do post earnings. I feel like the earnings are going to come in really strong, but it's anybody's guess about what the stock price is going to do.
Yeah, no, no question. And you just touched on so many great points in this. We've seen this recently, multiple times in this rally. Big headlines, a lot of anticipation about headlines. The most recent was the shutdown. Oh man, the shutdown could go on forever, and the market started to get weak. And then we're going to end the shutdown. Everyone expected a huge rally on the basis of that, and you didn't really see it. You just saw kind of a float after that. So to put a lot of weight in predicting what's going to happen based on a headline, and in this case, it's the Nvidia earnings. To your point, it's what are they going to say? They're going to say they had great sales. They're going to say they're, obviously they've already announced they got big investment in the future. Uh, is the market going to buy it or sell it? It's not what they're going to say. It's how the market responds to it that really is the factor. And the question that I have in this is as you see this kind of, you look over the last few weeks, we're definitely in a relatively like a short period downtrend, tested that low. We went below the 50-day. Where's that money going? Where's it rotating to? And what are people doing with it that are selling out of that? It's got to be going into something. NVIDIA is, you've talked about this in multiple video sessions we had, that the breadth is just not, it's not always strong, that it's a handful of these key stocks that are really bolstering this market. If Nvidia can do what it's going to do, but if the market is not happy with it, it could take that leg out from under the stool. That could be a big game changer for us.
Right. Yeah, absolutely. The thing that I think why we're in this digestion period right now is that, again, kind of going back to the stool metaphor, is that, of course, the AI narrative has been a massive support to that. The economy and labor market remaining resilient has been a big part of that. And then one of the other legs of the stool was that the Fed is in a cutting cycle. Well, the reason that we're in this massive digestion right now is that there's questions around all three of those now. The three things that have been rock solid all year long, and really for the last couple of years, ever since, we first heard about ChatGPT and the, economy was still, just roaring, all of these things. And, of more lately, the Fed being into a cutting cycle or signaling that they were. Now there's a lot of uncertainty surrounding all of those. So that's why the market has gotten so choppy right now. Again, I still have not seen a reversal of the trend here, John. So that's one encouraging thing. Of course, again, just over the past month, the trading has been pretty choppy. We've been down slightly. We've sold off about 5%, but there's still some pretty key support levels. Underneath this market, one really key one to watch before we hop into kind of where I'm looking right now for opportunity today. One key opportunity, or excuse me, one key level here on the chart is this low right here, John. It's this big down day we had in early
Mhm.
October. We had this massive downswing all in one day. Traded down to 65.50 right here. This is when I believe this was related to when the China trade relations were kind of blowing up again in short term, and then it got resolved pretty quickly. But that low right there from October, the October low, that level of support is still below the market, technically speaking. So we're not that far off of that right now, trading, just below 66.25 on the S&P. So, regardless of how Nvidia earnings go tonight, if it's great and the stock, is up 10%, whatever it may be, great. But if it's a little choppy and the stock price isn't great, definitely keep an eye on that 65.50 level right there. I think that's a level markets are watching closely. But that said, overall trend is still intact for this market. We're still up nicely on the year. It's been a good year, still well above the 200-day moving average for the index. So those are just kind of my thoughts on just the trend and what we're watching closely at the index level. But John, I did want to go ahead and pivot and, given everything that's going on in the market, talk about kind of where I am seeing some great opportunity in the market right now. Just, still from the long side, still from a bullish setup, but, kind of a different setup than what we've gotten, used to looking at so much over the past year in this bullish rally.
Mhm.
So it's this one right
Yes.
here. Yeah, go ahead, John.
Yeah. No, I was just going to say, I'm always looking forward to these. I know I did want to follow up. I know last time we were on this, I threw a pick out there. It's kind of like, I'm going to show you what I'm looking at. And man, did I fall on my face. So it really didn't do well. I had Fastenal and I thought it was going to bounce back off of a low, but you pointed out like the overall trend was dropping lower. That you could get a little quick bounce back, but definitely didn't look like it was going to do it, and you were spot on. So I'm going to get back in my lane here, and I'm going to keep my stock picking tips to myself. I'm going to totally be taking notes on everything that you're spitting out here, Blaine.
Well, John, I'll say I was not delighted to be correct in that case. I'm sorry to hear about the trade on that one, but yeah, no, we'll definitely go ahead and look at this new opportunity here. So, we've gotten so used to AI, everything is kind of tangentially related to the AI trade. Have been a lot of the main drivers in the market this year, and there's been a lot of sectors that really got forgotten about for the last 6, 7 months because everything has been so related to AI that's been rallying. And one of those, of course, has been healthcare. It was kind of a forgotten sector. You see this name here, Thermo Fisher, the ticker is TMO. It started to rally quite nicely. It really had a nice, bottoming out basing period, had a really, tough beginning to the year, and Q1 trading had a, pretty significant downtrend, but it found this bottom right here, through early part of summer, late spring. And you see the stock started to get constructive here in the early part of July. It started to, trade up off of those lows, had a nice pop higher, confirmed it. It continued to stay in this range, and then it's continued to make a nice series of higher highs and higher lows since then. Now, it has had a huge move, looking at, just the past, 6 or so months, with the June lows right there. We're trading down around 390. Now, currently, the stock is up to about 570. So that's a huge move higher. But nonetheless, this is a very clear trend breakout on the charts. You can see our 21-day EMA right here is above our 63-day EMA. That's our red and our green lines there. And again, you can see when the stock started to get constructive back in midsummer, right here is when that technical trend lit up on the chart. And you can see it's still intact currently now. And just the last week, the stock was trading higher, making multi-month highs right there. Not quite breaking out the 52-week highs yet, but still very constructive trading. As this trend is continuing to break out, stock has pulled back to a middle Keltner channel, so that's offering a really attractive trade entry point at this current level, given that it's kind of cooled off from those recent highs. And so, of course, with the rotation we've been seeing, John, a lot of that money has been coming out of these areas that have been the massive winners this year and getting redeployed into, other pockets of the market that still have, strong growth opportunities, but, growth at a reasonable cost. That seems to be kind of the market's MO right now. It's still chasing growth, but, it's being more discerning about valuation. And that's, I think, what they're looking at right here with TMO. They're pivoting into healthcare. And the way I look to play this one, again, I still like this one to the upside, John. The trend is very clear in this breakout, but given the run that it's had over the past couple months, I would like to have a little downside protection built into this. And also, too, it's almost a $600 stock. The options are very expensive here. If you're just trying to look to play this just from a, buying a call perspective, or even just buying the stock, it's a very expensive stock. So the way I'd look to play this one is actually with the in the money call debit spread, John. So you're kind of addressing, it's a little more price effective with that spread, but also you have that nice downside protection built in, and your profit potential ahead of time too. So I was looking at this 500 and 510 in the money call spread here. So looking to buy to open the 500, sell to open the 510. And again, you see it's a nice 10-point spread. The current market price is at 6.9. I think the bid-ask spread on this one is a little bit wider, so probably going to enter my order just a touch higher, just to give it a more likelihood of getting filled. So I'm going to go ahead and put it in at 7.8, just given that how wide the bid-ask spread is on that one right now. But I think I'll probably be able to get filled on that, before the end of the day. So, but that's my trade opportunity that I found today.
Yeah, no, that one looks good. I definitely love your point about the money moving into stuff not really directly correlated to the AI bubble, and that you know the money is going somewhere. It's going into other places, and if you get a sense of where it's headed, you can be ahead of it, and you can really benefit from that. And this is a great place to take a look at, a great place to watch, and a great trade to we're going to follow now and see how it does.
Yeah, no, I appreciate it, John. Yeah, it's like you said, it's really, it's almost completely uncorrelated with how Nvidia has been trading. And, frankly, if Nvidia has a really bad report later on today, this stock may even be up because you're probably seeing more money come out of those mega cap tech names and AI winners into stocks just like this one. If it has a great report, probably a pretty muted reaction from this one as well. I don't see that being a huge headwind to this. It's still nice trend going there. So it's kind of removed from all of that uncertainty you're going to have, and the crazy hour after the market closes later on today. But John, did you want to talk about Nvidia real quick? Just pull up a chart and just kind of look at what our thoughts are on
Well,
that.
yeah, absolutely. I know everybody's paying attention to this, and I've got the two questions for you. First off, we're headed into a big high expectation earnings announcement. Would you even trade it? Would you pick any kind of trade for Nvidia? And if you did, you could say yes or no, but even if you say no, I'm going to still ask you, if you did trade it, what would you trade?
Sure thing. Well, so these are kind of my thoughts here, John. Just in general, given the, just high volatility stocks have around earnings reports, I typically try and shy away from trading stocks right around or going into their earnings because again, it's anybody's guess about how the share price is going to react. Again, I'm fully confident the company is going to report good numbers, but it's impossible to say how they're going to, the price is going to react after they actually, release the report later on. Overall, the trend for Nvidia is up. The last couple months it has been consolidating. It's been in a pretty tight range. Minus this, pop where it had, just about a week, it, rallied up above 200, set some new all-time highs, and then came right back down to the range where it's been consolidating really since the beginning of August. So, since the beginning of August, the stock really hasn't gone anywhere. I'd be a little hesitant if I had to absolutely trade this one. I would probably still trade it to the upside. Um,
Mhm.
Given that it's built this nice base underneath it over the past couple months, it's tried to break out, it traded right back down, but it's held the support level. So I would probably definitely trade this one to the upside. Again, the trend is still overall bullish on this one, but I would probably still try and play it with the spread. Honestly, I know there's so much time value baked into these Nvidia options right now, given the excess volatility the market's probably pricing in to the stock prices movement after hours. So I'd probably go ahead and look to play this one with a spread, take advantage of that time value, make it work in my favor as opposed to against me. With trying to set up an options trade, if I was just trying to buy a call to play to the upside, buying all that excess time value would be really expensive. So, I'd
Mhm.
try and, get a nice in the money spread. I'd probably pick something, I'd have to look and see what the market's actually pricing in regarding, you can take the options and, see what the market's pricing in for a move. For after the stock report. So I'd probably look at that first to see how much of a move, either up or down, they're pricing in, and then set my spread accordingly. But I'd probably be looking nicely in the money. Typically, when Nvidia reports, the market's pricing in somewhere around a 9 to 10% move, at least over the past several quarters. It has been. So, I'd probably be looking somewhere down around here, about the 155 or so for my sell strike. So somewhere in that range. So, maybe the 145, 155 if I absolutely had to. Again, I typically don't like to play stocks and trade them
Yeah.
into earnings because, again, sometimes you can just get those blow ups, overnight when the market's closed and you just put a trade on and you kind of get stuck holding the bag. So I like to try and avoid that. But if I had to, that's probably how I'd be looking to set this one up.
Yeah. Good take on this. Love the smart approach. Both the overarching smart approach of kind of avoid earnings if you can. But if you can't, if you are obligated or feel absolutely compelled to trade it, give yourself some protection there. So that spread really sets you up with just a a really smart trade to take advantage of this. And and if it isn't Nvidia today, it's going to be something tomorrow that's going to be all dramatic. And it's always good to have a tool like that in your toolbox to be able to take advantage of those. So thanks for putting that out there. I know it put you a little bit on the spot on that one, Blaine. So thanks for playing along.
Oh yeah, no worries. No, always happy to give my thoughts on current setups and kind of how I look to trade them. So no, appreciate it. I know it's kind of, top of everybody's mind. It's the big story of the day. A lot of people have been looking forward to Nvidia Day for the past couple of weeks. So it's finally here, so we might as well talk about it, right?
Absolutely. Well, good stuff, man. Hey, thanks again for carving out the time. Glad we got to catch up, and hopefully it won't be so long for our next time we catch up again.
Yep, absolutely. Yeah, hopefully we can get together this coming Wednesday and have another chat. So until then, John, appreciate you. Thanks so much for having me here, and I hope everybody enjoyed watching.
Absolutely. Talk to you later, Blaine.
See you, John.